All right, guys. 5 minutes after the hour, we will go ahead and jump on it. So, welcome to AIRO 101. This call happens every Sunday, 10 p.m. Eastern Standard Time, every Sunday. And this call is just to go over the basics of AIRO. That is, we will talk about, why I created AIRO. We will also talk about how to set AIRO up, as well as the different aspects of the visual layout of AIRO, and then how to use AIRO. Typically, we will only go over strategy number one, but until all strategies are revealed, every time I reveal a new strategy, we'll talk about strategy number one, but also we'll talk about the new strategy that was just revealed to give a little more context around how to utilize that strategy. Last week, strategy number 4 was released. Therefore, today we will talk about strategy number 1 as well as strategy number 4. Also, for those who are beginners, talk to you guys about the basics of how to actually take trades and utilize the actual software itself when it comes to utilizing the software when it comes to trading, making actual trades. So give me 1 second. Let me pull the charts up for you guys. All right, so I got the charts ready. So real quick backstory on myself for those who don't know me. My name is Nathan Williams. I'm the developer of AIRO. I have a degree in mathematics, minor in computer science. I've been trading in the financial markets, for the last almost 14 years now. Particularly in Forex for the last 4.5 years. So 4.5 years of trading Forex, I've seen a lot, learned a lot, had a lot of ups and downs. And the last 2 years of my Forex trading, I have been working on being effective teaching others how to trade the Forex market. And I finally got to the point where I had to take a step back to figure out what exactly I needed to do to make it easier for individuals to see what it is I saw and what I see and what others see in the market. And so I wanted to cut down the amount of time that everyone spends on the charts. I have spent thousands of hours over the last 4.5 years just with Forex, and even before that, the other markets as well, trying to understand how to read the charts. And at the time of being on the charts and losing money, you start to figure it out. More courses you take, the more learning you get. And so, I decided to build a visual layout because that's all the Forex market is a visual layout. Once you have been on the charts long enough, your eyes are trained to see certain things that most people don't see. And so I wanted to set up a visual layout that could show people exactly what it is that I see, and then gives them the confidence with the very simplistic rules that I've created to actually successfully trade the market. The cool thing is people are having success with it. The bank, with Auvoria Prime, had very good success with it. The company blessed it off then, has brought it to the masses now, and so now everyone is purchasing AIRO and very good results. Those who aren't, we have some things in place. Starting after the holidays, starting the beginning of the year, I will start to institute a question and answer call. So every Friday, just to go back over the past week. So if anybody had a rough week in the market, we can go back and relook at some of those trades, talk about some of the different concepts so that people can understand why they lost, so they can learn from it. And then the following week, they can get better and hopefully not make those again. So let's go ahead and get into the charts. All right. Got this pulled up here. If you can see the charts here, let me get a 111 in the chat. If you can see my chart, let me get a 111 in the chat just to make sure that everybody can see the chart. All right, I'm seeing the ones come through. Great, great, great. All right, so people can see the charts. Great. This is AIRO. This is the software that you guys, some of you guys have already purchased and or already utilizing or are trying to set up for those that are brand new to AIRO and Auvoria Prime. Before we get deep into the actual software itself, let us go and set up a new chart so you guys can see how everything works. All right. So I'm going to pull up a pair. All right. So this is how a chart typically looks. All right. Without AIRO. This is how a traditional candlestick chart looks without AIRO. All right. If your chart, when you first set up your MT4, and again, this platform that I'm utilizing here to trade and utilize AIRO is what we call MT4 or MetaTrader 4. This is the software that allows our and to the chart to give us the actual visualization of the charts itself so that we can actually make the trades. If you want to have the settings to make your chart look like mine, what you want to do is right click on the black part of the screen, or if you have a Mac, double click, and then you want to come down to properties. I will leave mine here for you guys to take screenshots of, pictures of, so that you have those, settings. You can go and put those in there and save those to ensure that you have your default chart set up. So here are my settings for the colors. And then you come to common. Here are my settings for the common, my common setups. Take a screenshot of that, take a picture of that. That way you have those for yourself. Once you're done, you select OK. And you can see the chart here. It'll look just like this. All right. Next thing you want to do is you want to save your default chart. That way you always have this chart to go back to. So you come up here to this icon right here. This is the templates icon. You want to select that and hit Save Template. All mine default. All right. Come in here and type in default. All right. Then hit save. Simple as that. I'll replace mine. That's fine. And you should have this setup here. All right. For those who would like this setup. All right. Doesn't really matter when you place AIRO on it, but this is the setup that I go with. All right. So when you're trying to add AIRO to your chart, if you first set up in your back office, you want to ensure that you give your VPS time to start. It takes about an hour or so before your VPS can be set up. Once your VPS can be set up, you can log into your software through the back office, or you can download a RDP. So if you go into your on your phone or your tablet, wherever you want to download it, or even on your computer, you can actually, and I'm in my RDP right now. So RDP is your retail desktop. Your Microsoft. What does it stand for? Give me 1 second here. It depends on your computer. Depends on what yours is called. So your RDP allows you to connect to the VPS. Now everyone has a VPS. For those who are kind of curious, the VPS allows you to actually access your software no matter where you're at. If you are out of town and you want to log into the software to take trades on someone else's computer, you can do that securely through your back office, access on the website, the Auvoria Prime website. If you lost your phone, you can still access your back office through the back office, or you can set up another RDP. I will show you the RDP that I use for Apple. Give me 1 second here. It's the same one for Microsoft. For the regular Microsoft desktops as well. So we have all right. So I'll show you here on my screen here the app here that I utilize for my phone. It's a little blurry there. Let me try to block real quick, guys, so it's not as blurry. Yes, you see that there's remote desktop. So Microsoft Remote Desktop Mobile, or on your desktop is the Microsoft Remote Desktop. If you have a Windows computer, if you have a Mac, it's the same thing. Microsoft Windows Remote Desktop. All right. RDP stands for Remote Desktop. Now, what this allows you to do is log into your account. All your login credentials are going to be in your back office when you're setting it up. All right. So it'll ask you, they give you the option to log into your VPS, launch your VPS through your back office. Or again, so you guys can understand it here. Let's go ahead and take a look at it real quick. Let me pull up my back office so you guys can see exactly what I'm talking about. All right. Here's the back office, guys. You want to come over here to AP Marketplace and go to Switch Tools. Uh-oh. Let's go back. Like we got a connection problem. Let's try again. All right, there we go. All right, so you guys can see here, I have got the bronze software, which means I can only have one software running at any given time. And you can see here, before you set it up, it'll give you the option to set up your software. So you select AIRO. All right. Once you select AIRO, you see it has the AIRO box here, active, launch the VPS. All right. When you launch the VPS, you get another desktop right here. And from here, you can go in and you can set everything up. Please select the VPS to connect to. I can select that VPS to connect to. I can use this password. And then when I log in, I'm going to save this password here. Copy. All right. You want to connect to your VPS, or you want to go with a remote desktop connection. All right. Remote desktop connection, you get your username, your IP address, and your password here. You'll need all these information, copy it down to log into your remote desktop. All right. Once you can use that connecting to your remote desktop. The remote desktop is the most secure. All right. It's the most secure. It doesn't lag as much. You just have a better user experience with your remote desktop than you will going through the back office. All right. So it's recommended to have access to your remote desktop. All right. So you want to make sure you get that information. And then I will show you real quick here what that looks like. All right. So as you can see here, this is my remote desktop, Microsoft Remote Desktop, Mac. So this is what it looks like on the Mac. It should look almost the same way on your desktop. All right. I mean, on your, for those who have a Microsoft desktop, all you do is you select new. You type in your connection name. So if you want to call it, AIRO, you can. That IP address, you type it in here under PC name, username, trader, password. Then you close it. This will pop up right here. You see I have one for AP, Auvoria Prime, AP. And then all you have to do is double click on that one. And when you double click on it, it takes you into the charts that I showed you that I had. It'll take you straight here. And that's it. That's how you connect. All right. That's how you connect to either into your back office or you connect into your remote desktop on your computer. And again, the remote desktop on your computer or on your mobile device, your tablet, that is the recommended. All right. Once you do that, again, you guys have for setting up the chart because your chart will pop up immediately. All right. For those who don't know how to actually log into your account, what you want to do is you want to, if for those who are new, you want to make sure you get a broker's account. If you need help, with some brokers, definitely, you can contact me. I can, kind of give you some recommendations on some brokers to utilize for many reasons. But you get a broker, and then to set up the broker, what you want to do is you want to go to File, go to log into trade account, because once you set up your broker's account, you're good. So once you're good to go, you're good. You have all your credentials. They'll give you your login, which is just your account number, and they'll give you a password. They'll send you the email for it. So for my demo account here, and I got a demo account up because I'm gonna show you guys how to put some trades on, and I don't want to risk my own money when I'm just doing testing. All right. So when you get this information here, you'll literally type in your account number. You'll type in the password they give you, not your own password, but the one they give you in your email. The server is correct. So mine's demo 3 because I use Hugo's way. Save account information. Hit log in. Once you log in, you'll see down here in the bottom right-hand corner that you will have a connection. It'll tell you, so many kilobytes that you're running at any given time. Once you see that, you're good. Also, this icon here called terminal, you can come over and see your balance. You can see here, I got a demo account, $4.88 on my demo account. But, it'll tell you whatever your balance is. So if you selected the demo account for 5,000, it should say, you trade here, balance 5,000. So when you see your balance for your actual account number, then you have successfully logged in. All right. All right. Next, you set up the chart. You saved it as default. All right. And then next, you want to select this icon right here. It's a gold folder with a gold star. It's called your navigator. Once you select that, you get your pop-up icon over on the side. It's pop-up menu. You want to make sure that your indicators, you hit the plus button. All right. You hit the plus button. You will see AIRO V1, AIRO V2. AIRO V1, do not select. It's going to be deleted as AIRO V2 is the newest update. And soon to be AIRO V3, on adding some additionals, for you guys. That's why it wasn't launched this weekend. Look out for the update on that one. But you simply just double click on AIRO V2. Under common, you select allow DLL imports. Under inputs, make sure your desktop alert and your push notifications to your phone are true. All right. Next, depending on your actual broker server time, you want to adjust the money zone from 12 a.m. Central Standard Time to 12 p.m. Central Standard Time. Once I explain to you what everything's on the chart, we'll come back to this so that you guys understand what I mean by the money zone. But right now, you select OK. All right. Once you select OK, you see here. Now you have the chart. This is AIRO. The software is now on the actual chart itself. All right. So let's talk about AIRO and the different aspects of AIRO. So as you can see here, we have green box down here, long green box, and then we have some shorter red ones here. All right. These boxes here, these zones are what we call them. These are support and resistance zones. Red is resistance, green is support. As you can see here, when price, which is these candlesticks here, these are candlesticks. When price touch the red box, they're going up, touch the red box, they do what? They reverse, opposite way. They hit the red box right here, reverse, coming on down. Resistance is like the ceiling. If I take a ball and throw it at the ceiling, it will hit the ceiling and bounce off the other way. That's exactly what's going on here. And then support, you can see here, support came down, hit the green zone, bounced up. So support's like the floor. If I drop a ball on the floor, it hits up off the floor and bounces up. That's all support and resistance is doing. All right, it's a point where price, typically turns around at. Sometimes it breaks through it, but strong resistance and strong support levels are where price typically turns around. So again, this just helps you to understand when you should be taking a trade or when you should not be taking a trade, or in what direction you may the actual overall trend it may be going. For us, we can tell the trend because we zoom out all the way. So you want to zoom out until you can't zoom out anymore. And you see here, you count your zones. And you say, all right, I've got 2 red zones, and I have 1 green zone. This tells me that I'm in a downtrend right now. It means price is trending downward, which you can clearly see. Price is trending downward because we have more red zones than green zones. Last week, we had more green than red majority of the week. And you can see here, price was going up. Now it's heading the opposite direction. This is what price does all the time. Up, down, up, down. What you need to know about the actual AIRO software is how to read it so you understand when price may be turning around or when it may be continuing in the same direction. Right now, price is in a downtrend, 2 red, 1 green. All right, we zoom back in. Next, you can see the blue line here. All right, this baby blue line is the moving average. I can't tell you which one it is, but I'll explain what a moving average is. So let's say, for example, this was a 100 moving average. What a moving average does is it takes the price of the past so many candles. So for example, if this is the 100 moving average, it looks at the past candles based on their price, their closing price, and it moves with price. As you see here, when price is kind of moving sideways, right here, it's not really going up or down, just kind of going sideways. The line is just kind of going sideways. When price finally dropped big and started heading down, the line started heading down. So the moving average is to give you an identification of where price is going based on so many candles. All right. They call it a moving average because when a new candle opens and another, the previous candle closes. So for example, if you have 100 candles that price is looking at, when a new candle starts, the last candle disappears. Therefore, the average changes. Therefore, the movement of the actual line changes. As you can see here, it's not always a straight line. It moves around with price based on the fact that it's a moving average. The last candle is closing. It's dropping off, and a new candle that started is now being added to the data to account for the fluctuation in the overall average of price over so many candles, depending on which moving average you're using. All right, that's how the moving average works. We use it from a directional standpoint. If price is underneath, again, remember, price of these candlesticks, if the candlesticks are underneath the moving average, typically we're in a downtrend. If price or the candlesticks are above the moving average, typically we're in an uptrend. Which brings me to the trend colored candles. I have a formula built into the software so that when price is in a downtrend, typically it's going to be a red candle. When price is in an uptrend, typically it's going to be a green candle. All right. Now, what does that mean? So what that means is most likely when price is in an uptrend, it's going to be above the moving average. And when it's in the typically going to be below a moving average. This helps you to see how price is trending. It helps you to hold your trades longer. So if you're in a trade, you can hold the trade longer because you see that, oh man, I got in, it's still red, it's still underneath the moving average. I feel good about this trade. And then boom, look, continue to headward down. Heading down even more, it's still red, still underneath the moving average. So it's just a visual identification to help you understand and see where price is going and how it is. Do you understand if you can get into the trade or if you can hold the trade if you're already in that specific trade? All right. Next are these tinted zones here. See the tinted area? Tinted area? This tinted area here. This is the money zone. Now, the money zone, we call it the money zone because for those who are new to Forex, the foreign exchange currency market is a $6.8 trillion a day market. All right. 80% of that $6.8 trillion a day is traded in this zone, this tinted area every day, which means what? Which means this is the best time to trade. You want to trade when the money trades. As you can see here, outside of that zone, price doesn't really move much, move sideways. When it gets inside the zone, it's moving around, it's moving. You see here, moving sideways, gets inside the zone, up and down. You have a lot more movement. We can go back and look. Sideways, inside the zone, it's moving. All right. This is the best time to trade the market as a beginner because that is when the money is moving and when price is trending the best. It's easier to catch pips, and we'll talk about pips here in a minute, when price is trending in a certain direction. All right. Last but not least, you have the arrows, all these white arrows here. These arrows are my specific, strategy. These are what we utilize to help us get in and out of the trade. There's 3 different strategies behind these arrows. They're all the same arrow, but there's 3 different strategies. So they pop up at different time frames. The first strategy, as you guys can see, we're in a downtrend, right? We're in a downtrend. We know price is heading down. We already identified that. The first strategy is a trend change. You can see here, the candlesticks were green and above the moving average. Now they're red and below the moving average, and we had an arrow, which tells us what? That price changed its trend. All right. This is a confirmed trend change. All right. Now, when it comes back down here and may pull a little bit, but it continues the trend, you get a second arrow, which is the second strategy. That strategy is the trend, is the continued trend strategy. So you have a confirmed trend changeover. So when price has confirmed to have changed trends, you get an arrow down or up, depending on which way it's changing. You have a continuation of that trend. All right. And then you have the counter trend. We see that it's a downtrend, but this candle is headed up. All right, it's pointed up. This is a potential counter trend opportunity. All right, now just because we see these arrows, you're probably wondering, how do I know which one to take and when to take it? These is when all the rules come in place. There are 7 different strategies as of right now. We're going to be adding some more later on down the line. But as of right now, there are 7. In the back office, you will only see 4. I am releasing 1 strategy per week from day 1 of launch. And so the number 1 strategy is the bounce, arrow, go strategy. All right. You may know bag by the slang term, getting paid, get money, bag. With arrow, bag, bounce, arrow, go. All right. Bounce, arrow, go. So let's put a little better pair so I can explain it to you real quick here. All right. So you can see here with the bounce arrow go strategy, which is strategy number 1 for those who have not watched the videos, you want to first do what? You want to identify the trend. So you zoom out, and a lot of people have been confused about how many times to zoom out. You want to zoom out so you can understand the trend. To truly see the trend, zoom out all the way till you can't zoom out anymore. All right. Then you can see the trend. We can see we have 1, 2, 3, 4, 5, 6, 7, 8 red zones, 1, 2 green zones. All right. 8 red versus 2 green. We are in a significant downtrend. So we know we're in a downtrend, which means we only want to take sales. All right. So we only want to take sale trades. All right. So we zoom back in to get the current price. We're going to look at this past Friday. All right. We're here now, but we're going to look at this past Friday. We know we're looking for sales. So we're looking for sales. All right. We're looking for down arrows. All right. Now, if you guys tick my settings down, you'll see that you get these dotted lines that pop up here. This is the start of a new Forex day. All right. So in this day here, which is Friday, all right, we're looking for only down arrows. All right. And then we want down arrows that are what? We want down arrows that are only at the money zone. So this shaded area here. Remember, we talked about it. We want to trade with the money. Therefore, we're only going to look for trades inside the money zone because we want to trade with the, all right? And then number 3, so number 1 rule, identify the trend, zoom all the way out. Number 2 rule, whatever the trend is, only take trades in that direction inside the money zone. We know we're only going to take sell trades inside the money zone. All right. Next, we want to use the bounce arrow go method. All right. Now, what does bounce arrow go means? All right. We know we're looking for a sale. We want price to bounce off of the red zone, head down below the moving average, receive an arrow pointing down, take a trade. And you see here, we'd have got in. When this arrow popped up, this candle closed, and this candle right here opened. So we'd have got in on this candle here. It went backwards on us 8.5 pips, and it dropped 36 pips. All right. We only want 20 pip take profit, 40 pip stop loss. Now, what does that mean? All right, let's go look at it. We would have put our trade right here where this yellow line is at, on this candle right here. All right. Our take profit, or first of all, our stop loss. So at that point, that price is 1.61023. All right. Our stop loss would have been at 1.61023. 423. That's 40 pips, which is about right here. That's exactly 40 pips. All right. And then we put our take profit at 20 pips. Now, if we're in a sell, our take profit is going to be below our entry. If we're in a buy, our take profit will be above our entry. All right. So below, we want 20 pips. So if 1.61023, all right, is the our entry price, then what we're looking for is 20 pips lower than that. All right. So 20 in that. And again, I can do the math because I've been trading for a while, but I'll explain to you guys how to do the math as well. 1.61023 is going to be 1.60823. Right there, exactly. All right. 20 pip take profit, 40 pip stop loss. All right. As you can see here, price never got anywhere close to our stop loss. It went right here, but it came through and broke right through our take profit. That is a successful AIRO gold trade that happened on Friday. That's it. That's as simple as it is. Bounce off the red. When you're looking for sales, you want price to bounce off the red first. All right. Red is significant for sales. Red bounce, and then you want to see red candles and a down arrow. All right. But when you're looking for the opposite, you want price to bounce off the green and enter in on up arrows. All right. And typically the up arrow is going to be pointing to a green candle. All right. But that's only if you're trading into a uptrend. That's the strategy, guys. That's it. That is it. Now let's kind of go over. Let's go over a few things. For those who are new, we're going to go over, what are pips. So pips PIP stands for, and that's PIP, stands for price interest point. All right, actually, before we go there, let me stop sharing real quick and let me go to the Q&A. If you guys have any questions, make sure you put it into the Q&A box. All right, make sure to put it in the Q&A box. Let me also, we'll go over this real quick. Got to get in the habit of this, guys. I apologize. Should have done this earlier. All right. So I'm going to read the disclaimer real quick. As you guys know, or if you don't know, trading the foreign exchange market is risky. There are no guarantees that you will win. There are no guarantees that you'll make money. All right. When putting your money at risk, please use proper risk management. All right. And just know that Auvoria Prime nor myself are providing any investment advice. We're simply here to teach you how to use tools that are used to trade the foreign exchange market. But that is not financial advice. That is just showing you how to, educating you on how to utilize the tools. All right. So I had to share that. Give me 1 second here. Let me go to Q&A. So we have questions about counting pips. There are asking, can I only count the pips by dragging the modifier? So we'll go over that here in a second when I come back to teach how to count pips. Yes, there are ways. Yeah, we'll go over everything pips wise here in a second. All right, guys. All right. Someone asked about when changing the time frame from the 15-minute chart to the hour chart, what type of effect does it have on the bag strategy? So let's go look at that real quick, guys, so I can help you guys understand this here. Again, a lot of these questions, again, this call is supposed to be a call about the AIRO software. There are multiple videos in the back office under AP Academy at the very top of the top menu bar that will break down every different aspect about Forex that you guys can understand. So for those who don't know, we are utilizing the M15. M15, this means we're the 15-minute chart. What that means is each one of these candles takes 15 minutes to form. So it's going to sit there and go up and down, up and down, up and down for 15 minutes, and then it will stop and move to the next candle. All right. That is what the 15-minute time frame does for you. Now, if you switch to the H1, that is the hour time frame. Now each candle took 1 hour to form. All right, 1 hour to form for all these candlesticks. That's the only difference. All right. So on software, when you zoom out here, if you go to the H1, you will see we're still in a downtrend. All right. You also see that, your candlesticks, you have less arrows now. These arrows are based on the strategy on the H1 versus the M15. All right. All right. So there's a lot of different changes. Make sure to watch strategy number 2 as I talk about how to take trades with the higher time frames. But for those who are beginners, stick with strategy number 1, which is on the M15. So when utilizing H1 though here, for those that ask that question, it doesn't change anything. As long as you follow the rules with that strategy, for strategy number 2 in the higher time frames, you will be okay. All right, just follow those rules in strategy video number 2, strategy number 2, trend trading. All right. Let's go back here and look at the Q&A. Again, this call is for beginners, guys. Someone asked me about S&P 500. I will not be giving tips about S&P 500 on this call because this is a 101 call. It's an entry-level introductory call. All right. It is possible to connect the VPS via mobile. I show the app that you can utilize to download to your phone. I asked, do I let my trades hit my take profit or do I get my pips and dip? So there are 3 ways to exit a trade. Either the trade hits take profit, either the trade, that's one way. The trade hits stop loss, that's the second way. Or if you're in a trade, and let's say, as we saw here, we're in a sale. Let me pull the chart back up so you guys can see that here. All right, so if I'm in this sale here, like for example here, if I'm in this sale, I get in this sale, and I'm up a few pips. Now I didn't hit the 20, but and then this zone pops up. Well, we know we're in a sale. The opposite color zone that you bounced off of to take the trade pops up. So we know we're taking the bounce off the red zone to get the entry for the sale because we're in a sale trend. And if this chart right here, or this zone right here pops up, the opposite color than red, which is green, I immediately exit the trade. All right. That is a opposite color zone, which means that price most likely is going to bounce off that zone and head in the opposite direction. As you can see here, it went way back up here. We entered the trade right here. It went back over entry. Now it's back below it, but we lost all of our, we lost all of our profits if we never did close the trade. So you want to close the trade when it hits take profit. And when it hits the take profit line, it will automatically close the trade. When it hits the stop loss line, it'll automatically close the trade. And then when you see the opposite color zone pop up, you immediately close the trade. I'll show you how to do that. First, let's clear the software or these lines. So we clear these lines. All right, the best, fastest way to enter into a trade, you want to right click on the black of the screen. You want to hit one-click trading. All right, and you get a little pop-up box right here on the top. All right, there are 3 different aspects to this one-click trade. One in the middle right here is your lot size. You can actually change your lot sizes. Now, what is a lot size? Well, let's go over that. There are 3 types of lot sizes, guys. 3 types. First type of lot size is the micro lot. Micro lot, which is from 0.01 to 0.09. That's how you write it. You see here, I've got a micro lot in here right now, 0.01. All right. If I change it to 0.09, I now have the largest micro lot you can have. All right. So a 0.01 lot size is 10 cents. A 0.09 is 90 cents. All right. Next is a mini lot, which is written as 0.1, 0.99, or $1 to $9.90. All right. So a mini lot is written 0.1 to 0.99. So 0.1 is a $1 lot size or a mini lot. All right, $1. So you're wagering $1 per pip. I'll explain what I mean here in a second. All right, it'll all come together. And then last but not least, the third type of lot size is the standard lot. All right, the standard lot. The standard lot is written as 1.00. So 1.00, that is a standard lot. It goes from 1.00 to infinity because the more money you have in your account, the larger the lot size you can use. It's all about leverage. All right. I've seen a bank's screenshot of their trades, and I've seen with a 1,000 lot size. I'm sorry, 100,000 lot size. And so a 100,000 lot size means they are risking $1 million per pip. If you see the theme here, 0.01 is a penny, but it's 10 cents for 0.01. 0.09 is 9 pennies, but it's 90 cents. That's the leverage, power of 10. So all you do is multiply everything by 10, all right, so you can understand how much money you'd be risking per pip. All right. I recommend for every $100 you have in your account to use a 0.01 lot size. All right. So if you have $1,000, you should use a mini lot, 0.1, because that's 0.01 times 10. All right. You have 10 $100 bills. All right. If you're using a $10,000 account, you should be using a standard lot, 1.00. All right. That's 0.01 times 100, which gives you the standard lot. If you're using just a $100 account, you should be using a 0.01 lot size. That's what I recommend. Again, as you trade longer and understand your level of risk, you can adjust your lot sizes based off of the level of risk that you're willing to take on. All right. All right, great. So these are lot sizes. So now what does that mean? So now you have to put the trade on. So we know we're in a sit down trend. I'm going to select sell here, but I have, as you saw, $4.88 in my account, my demo account. I need to get another one. I'm going to use a 0.01 lot size. All right. And I'm going to hit sell. When I hit sell, boom, you see I get a green dotted line here. This is my entry. This is where I have entered into the trade. Remember, we put this on the chart. If you're new coming on board, you want to right click on the black of the screen. You want to select one-click trading here. Once you select that, this pop-up box here. You have in the middle the lot sizes. You can adjust that, but then also you have the sell button here and the buy button. I hit sell, and boom, we're in a trade. All right, we are in the trade. Let me make one quick little change real quick, guys. All right, so let's zoom in. So you can see here, there's a dotted green line here. You have the white line right here, and there's a red line up here. All right. These are what's called the spread. This is the bid and the ask. You can see here, when I put the sell on, when I hit sell, the sell, I'll put sell on again right here. When I hit sell, I guess I don't have enough money in my account. Yeah, put another trade on. Let's close this account real quick. Let's close this trade. You see I have a red line and a white line. The white line is the bid, all right, or the sale price. So when I select sale, it's going to place my entry where the white line is at. If I hit buy, it's going to place my entry line where the red line is at. Buy is also known as the ask price. All right. So we buy at the ask, we sell at the bid. So as you can see here, I hit sell and boom, put my dotted green line right at the white line. All right. Now, when I truly become in profit, and you can see here, it says AIRO pips. This is the pip counter. It's going to tell you what trade you're in and if you're up or down and how many pips. Well, as you can see here, back when the line was closer, it said negative. You're probably wondering, well, how is it -3 when you just got in the trade? That's the spread. So you can see here, there's a gap in between the white line and the red line. There's a gap in between the bid and the ask. All right. Bid is the sale price. Ask is the buy price. That gap is how the brokers make their money. So when I get into profit, both of these lines must be below the dotted green line. All right. My entry is here. When both of these lines are below it, I'm in profit. All right. Now, if you select this button right here, right underneath the charts, it's a little white tablet with or white notebook paper with a blue I don't know what you call that, a blue rim there. You select that, and you'll see your actual trade down here. All right. It's going to tell you your order number. It's going to tell you what time that you enter the trade based on your broker. It's going to tell you what type of trade. Of course, we know we put a sell on. It's going to tell you your size, which is your lot size you utilize. It's going to tell you the symbol, which is, what Forex pair you're trading. We're trading the Euro IUD, so the Euro Aussie dollar. It's going to tell you what price you got in at. It's going to tell you your stop loss and your take profit if you set them. It's also going to give you the current price, which you can see here is always moving up and down. Commission. So there's a formula that the brokers use. The spread times whatever your lot size is will give you the commission. Remember, the spread is the difference between the white line and the red line when you first put the trade on. So we saw that was 3 pips. So 3 pips times a 0.01 lot size, the formula they use is that it's going to cost me 5 cents for this trade. So you can see here, I'm in profit, or from a profit standpoint, I'm negative 36 cents. But overall, I'm negative 41 cents. Or now it's 38 because they include the 5 cents commission. All right. So if you close the trade out and you're wondering why you're missing out on a certain amount of your profits, or your loss is a little bit bigger than you thought it would be, go look at the commission and you'll see that, they're charging me a commission of XYZ. Again, if I've changed my lot size, the commission will be bigger. All right. This is the commission they charge me for the current spread at what it was at when I put the trade on and the 0.01 lot size. Now, swap. This swap right here is for if you hold the trade past this time frame. So if I enter the trade over here and this dotted line, which is the new Forex day, if I'm still in the trade and it gets to the new Forex day, they're going to charge me a swap fee. All right. So if you're a swing trader and you're holding trades for a very long time, you don't worry about that. That's all factored in. But for me, I'm a scalper. I like to get in and out. Therefore, I like to get in and out before the new day starts because I don't want to give the broker any more money. And what they're doing is they're charging me to hold my trade hot, for the next day. So they're charging me additional money on top of the commission. So keep that in mind as well. All right. If you want to close the trade, all you do is select the X right next to the trade. So if you're in profit, you're like, hey, I want to get out. Boom. Or if you like I said, if this opposite color zone pops up and you want to get out of the trade right away, like, time to get out. I'll take this small loss. Hit the X. That's it. Hit the X. And you'd have been in profit had this opposite zone popped up because you would have got your entry up here. So you just close it out before it hit take profit. All right. That's all you do. If you want to turn this off, hit that same little icon there. This is your terminal here. All right. Now to count your pips. Let's go put that trade on again. Sell. All right. So we put the sell on. Remember, we're selling, so we want price to be below us for our take profit. So we want to click on or put our mouse the dotted green line and wait for us to get a little icon. Wait for it real quick. There it is. It says drag to modify. You see that? Drag to modify. So we click and hold down on the mouse and you drag it down. And you can see over here that it says our order number TP, which means take profit. So you know you're going in the right direction for take profit when you're coming down. Because if you go the opposite direction, you'll see it says what? SL, which is stop loss. So it's going to tell you what you're doing. So, all right, great. You see this as SL right here. You know you're setting your stop loss. And you come over here, it says negative, negative 400 pips. Drop it right there. That's not 400. That's negative 40. That's 40. All right, so keep that in mind. 40.0. So that's 40 pips. Go back to that line again. Put your mouse on it. Wait till you receive the little pop-up box that says drag to modify. There it is. Click on the line and hold. Drag it down until you see it says negative. It says positive 200 bucks or 200 pips, which is about right here. All right. Now you have successfully set your take profit and stop loss. So when you come back down here to your chart, you can see here now you have a stop loss price and a take profit price already put into the system. All right. All right. That's the easiest way to set it. I'm not going to go through the other difficult way. I want to keep things easy for you guys. Now to measure it, you want to come up here to your crosshair. If you didn't quite know where it's at, because with this rule here, when you get a bounce arrow go, you don't enter into the trade the next opposite color zone in the direction you want to take the trade. So if we're looking for the sell here, as long as there's no green zone below us for 20 pips, we're good. So what does that mean, 20 pips? You click the crosshair button here, right up here, with your crosshairs. You get the arrow on this candle, which means you would enter in on this candle. Right here is the next one to it. So you click on it and you drag it down. And you measure it to how far it is in this green zone for the sale. And you can see here, the second number, you can see here, it says 32. Like you see this number here, guys, it says 32. That means that from this candle to this candle, 2 candles. That's all it's telling you, all right? The next number says 354. That is your pip count. That means 35.4 pips. That means from entry to that price is 35.4. So that tells us what? That tells us that we are good to go to take this trade because it is less, it is more than 20 pips away. All right. You want it to be more than 20 pips because our take profit is 20 pips. All right. So we want to have enough room to ensure we have time for, we have room for price to go down that way because price could go down that way and turn around. Price is not always going to come to the zone and reverse. Sometimes it'll stop before the zone and reverse before it. All right. That's why we want 20 pips distance. All right. And then the last number is just price. Wherever you put your cursor at is going to tell you what the price is right then and there. That way you have, that way, if you have it set at exactly 20 pips, so let's go find 20 pips. Boom. It tells you the price at what 20 pips is at. All right. It tells you exactly what price you need to put it at for 20 pips. That's it. That's how you use the software real quick. Open the terminal back up. Again, we're going to close the trade out. We hit the X button right there. We'll leave it up there, see if we can't get the little profits, make a little bit of money back. That is how you set your take profit and your stop loss. That's how you set a trade. All right. Now we're going to talk about these zones here. And then I'll come back and answer some more questions. This zone is the money zone. All right. For my broker, what you want to do is you want to identify what time is 12 p.m. So as you guys can see here, like right now, it is about to be 10 o'clock p.m. in Central Standard Time, right? So the next candle is 10 p.m., all right? Here, we're on this current, actually, we'll give it a second here. We'll give it a second to turn 10 o'clock and get the 10 o'clock candle so I can show you exactly how I set my settings for the money zone, all right? Let's give it a second here for this new candle to pop up. Come on, candle, let's go. There we go. It's 10 o'clock. So we zoom in. You can see a new candle started. All right. So new candle started. All right. So we take our crosshairs, or actually we take a vertical line. We'll draw a vertical line, and we'll put our vertical line on that 10 o'clock candle. All right. So we know this is the 10 o'clock candle. We know that the money zone starts at 12 a.m. Central Standard Time. So if this is 10 p.m., all right, we come down here and look at the very bottom down here. You guys can see that based on the server time for my broker, the 10 o'clock hour is the 0600 time frame when you talk about military time. All right, great. Well, if we know that 2 hours from now is the start of the money zone, then that means we go on from 0600 to 0800. All right, great. So now I know from 0800 is the start of the money zone. 12 hours later is the end. In military time, 0800 plus 12 is 2000. So if we come back in here to the software, right click on the black of the screen, come to indicator list, click on indicator list. You'll see AIRO V2, double click AIRO V2, come back to inputs, begin 0800 for me, based on the server of my time. Again, if you use Hugo's way, 0800 should be your broker's server time, start time. And then 12 hours later is 2000 based on military time. All right. And it tells you right here, money zone should be from 12 a.m. Central to 12 p.m. Central. That is what 12 a.m. and 12 p.m. Central look like for my broker. So what you want to do is do the same thing for your broker as well. That way, no matter where you're at in the world and no matter what broker you're using, you will have the correct time frame set for your money zone. All right. Once that's set, then you know what time of day you should be trading each day. All right. That's it. That's how you set the money zone, guys. Real simple way on how to set it. All right. Right now, let me stop and answer some questions from the queue. This is blowing up. All right. So somebody talked about last week that some people were disappointed last week when many of the alerts came through. There were not 20 pips to the next zone. All right. And then hours later, some of the zones disappeared to make it look like it would have been a good trade to have taken. All right. So let's go and talk about that, guys. Again, this is not the holy grail. AIRO will not give you every trade and make sure you're profitable 100% of the time, every time you look at the chart. All right. It is based on how price is moving for that time frame. That's why the money zone is there to help identify the time of day you need to be looking to trade. All right. These zones, they disappear and they reappear, which means they'll when price goes through all the way through the zone disappears, because that is what happens in real life. When resistance is broke, when price breaks through resistance no longer exists, price continues to go upward. When support is broken by price, support no longer exists and price continues to head downward. That is the reason why these zones appear and reappear. Now, if there are no issues, if you don't see that there's a way, none of the trades you took last week, you don't have the opportunity to get into a trade, I can tell you it's always true. You will always have an opportunity to take trades. There were individuals that followed the rules this past week, the week before that, and the week before that, and the months before that have made successful trades every week. So if during the time you're looking at the chart, you don't see any trades, that's fine. There will always be another setup, another day. You don't want to force every trade. You don't want to try to force a trade. So if you don't see it, don't take it. All right. The software, and again, we'll talk about this in a second about how to set that up. The software, there's a way you can set up alerts. You'll get an alert every time an arrow pops up on your chart. And again, we'll go back to indicator list here. Like we talked about, is make sure to have both the desktop alerts turned on and the push notification to your phone, making sure they're both true. All right. They're both true. When they're both true, and I'll show you here in a second how to set up your notifications to your phone. That way you can receive the notifications to your phone. You can go look at the chart for that notification you received, see if it matches the rules. If so, great. If not, move on. All right. So you can be disappointed. But this time of year is not the best time of year to trade, first of all. So for those who are trading, I'm recommending that you do not trade your real money. I stopped trading my real money last Monday or last Tuesday. So last Tuesday, I haven't traded my real money since. Any trades I take are going to be on demo. I am not taking real trades because this time of year, the market is slow because the money is not there. All right. All the traders, for those who understand, the banks, the hedge funds, these are the individuals, as we call them, institutional investors. They are the ones that have the money to move the market. When they go on vacation for the holidays, they're not trading. And if they're not trading, guess what? There's no liquidity in the market. Liquidity, money, it's not there. So if it's not there, you're not going to receive very good setups in the market. This time of year, you should be not trading unless you know what you're doing. All right. And even still, it's still a risk just because of the low liquidity in the market. Second week of January, the market picks back up. And that's the ideal time to be trading. Now, if you want to just practice with your demo account, just on how to enter in trades, seeing how everything works, definitely do that. But I would not risk my real money. So there's no reason to be disappointed. That is just how the market goes. We only trade what the market gives us. AIRO is a tool. It's not a magic crystal ball that's going to pop up with a signal and that's guaranteed to hit 20 pips every time. No, you have to understand how the market works. Right now, the market's not working. Right now, the market is slow because of low liquidity because it's that time of year. Second week of January, things pick back up. You should be good to go. But also, if you're looking at charts and you're not seeing entries, keep looking. You're not going to get the entry. For example, as we talked about, we know we're in downtrends. We know we're looking for sales. We had, on this day on Friday, we had 1 buy, 2 sales. All right? 1 buy, 2 sales. So on EUR, AUD, you would have received 3 signals. This one you wouldn't take because we're in a downtrend. All right? That's how it works. There's no reason to be disappointed or upset about it. The market gives you what the market's going to give you. You just need to ensure that you have everything set up to ensure you can take the trades when it's time to take the trade. So let me show you guys, for those who may have been disappointed, let me show you how to set up this, the notifications to your phone so that you can stop the disappointment. And instead of sitting in front of your charts all day, wait for a notification, go look at the chart, see if it meets the criteria that we went over for strategy number 1. If so, take the trade. If not, close it. Wait till you get another signal. So what you want to do is you want to come here to Tools on the menu bar, come down to Options. You want to go to Notifications, and then you want to come here to Enable Push Notifications right here. All right. When you get that set up, what you want to do is you want to go to you want to download the MT4 app on your phone. When you download the MT4 app on your phone, you want to go to Settings and then Chat and Messages. Settings, Chat and Messages. When you go to that, at the very bottom of the screen, you'll see you have your MetaQuotes ID number here. You want to type in that ID number here in the MetaQuotes ID. You want to hit Test. When you select Test will send a notification to your phone. You'll see it on the screen here. When you receive that notification on the phone for that test, it'll just say test. Then you know that you have it set up properly. All right. And so what that means now is that going forward, after that, you select OK. All right. I'm gonna hit cancel because I've already got mine set up on my real account. I don't need to set up my demo. So once you've done that, now you're set up properly. Next, you want to go into your phone or your tablet, whatever you're downloading the notification to get notifications. Go into your settings. Make sure that for the MetaTrader 4 app, you have notifications turned on and have a sound for it. That way, when you get a ding, then you know, hey, you'll get a notification that pops up on your phone. You then know to do what? To go look at that trade on that pair. It's going to tell you what it looks like. I'm waiting for getting one here so I can show you guys what it looks like, but it'll give us a notification. It'll tell you what to go look at. It'll tell you which Forex pair to go look at, and it will tell you to either buy or sell at a certain point. You want to go there and see if it matches your criteria. All right. That way you don't feel disappointed because you sat in front of the computer all day. You sit in front of the computer all day, and you should be good to go. All right. Give me 1 second here. So once you get that set up, you're good. Let me answer some more questions here. But yes, it is that time of year. The market's going to be slow. Someone asked me if I would recommend twin trading. It's really up to you. That's right now for beginners, I recommend just one position at a time. That's just my recommendation. But if you have a different strategy, and for those who want to know what twin trading is, means you put in more than one entry. So instead of hitting sell one time for that sale we just looked at, you hit sell 2 times. That means you have 2 positions. It's a little bit more risk for your account, but as a beginner, I recommend just hitting sell 1 time. If you're more experienced, then definitely use that to your advantage. All right, so someone asked the best way to understand how to count pips. Let's go back and show this again. In AP Academy, in the back office, guys, there's tools to show you all the basics. What is a pip? How to count pips. All right, make sure you go in there under AP Academy. All right. So to count pips, all right. So 5 numbers after the decimal place equals 4th digit. 2 or 3 numbers after decimal equals 2nd digit. Now, what does that mean? So let's look at it. EURAUD. You can see the price here is right now we're at 1.6030. All right. Our entry is at 1.60930. That's our entry price. All right. That is our entry. So there are it's 1.60930. All right. There are 1, 2, 3, 4, 5 numbers after the decimal place to the right. All right. Which means that if there are 4 or 5 numbers after decimal, 4th digit is your pip. So that means 6093. Boom. The 3 is our pip. So if price goes to 1.60920, boom, we have price has gone down 1 pip. All right. And then if we get all right. So if we go from 1.60930 to 1.60920, price is down 1 pip because our price has 5 numbers after the decimal, and the 4th digit, which is the 3, so the 4th digit after the decimal is the pip. So if we go down to 60920, we've gone down 1 pip. All right. If we go up to 1.60940, we have gone up 1 pip. All right. That's how it works. That's the number. And then it's like math, carry the 10. So if we go from 60930 to 61030, we've gone up 10 pips. If we go from 60930 to 60830, we've gone down 10 pips. That's it. That's how you count pips. All right. For a different one here. And we just had a pop-up box. Here we go, guys. So here's my live account. You can see here, we just received an alert on EURNZD. Let's go look at it real quick. I want you guys to see that. Boom. We had a down arrow. We got a sell arrow on that candle. You see when it popped up, this candle was in the form, like I explained to you. The arrows will only pop up when the candle it's pointing to has closed. Therefore, when you're entering a trade, you always know you're going to enter in on the very next candle right here. All right. Here it's EURNZD M15 sell at that price. Sell equals 1.71685. All right. That's it. That's it. Tell us the time frame. The time frame is going to be based on a broker time frame. All right. But that's what it's going to look like. And then it came to my phone, and I will show you what it looks like on my phone. So you guys can see that there. You can see it says AIRO, EURNZD M15 sale at the same price. It's going to give you the exact same notification to your phone, and that notification is going to come through your MT. You need to make sure your mobile MT4, you have the notifications turned on so that you can receive notifications. I got a little ding. You heard the ding on the computer. I heard it myself in my pocket on my phone. That way I know, oh, great, I got the ding. That ding is only for trading, so I know to go look at the chart. And I use my VPS on my phone because I can log straight into my VPS, see the chart. I can see if it's a bounce arrow go during the time frame it's supposed to be in the direction, and I can see the trade. Like I'm in my again, I told you, I'm in the actual VPS now. So what you see on the chart right now, I can log into my cell phone and see the exact same chart. And if this trade meets my rules, all I have to do on my phone is hit this button right here, or this button right here for sale. And then I can go and set up my take profit and stop loss and be done. All right. I can log back in and kind of monitor the trade, see how it's going. But that's it. That's how you do it real quickly. But yes, let's go back to the trade here. So that's for if you have 4 or 5 numbers beyond the decimal place. If you have 2 or 3 numbers after the decimal place, and let's find one real quick here. Oh, got it up already. GBP JPY. You see here? 139.135. So 139.135 is our entry. All right, that's our entry, for example. So if we want to count pips from here, let's count. 139 point, remember, there's 3 numbers after the decimal place, which means that the second number after the decimal place is our pip. So if our entry is 139.135, that means the 3 is our pip. So 125 means we are down 1 pip. $139.145 means we are up 1 pip. All right, that's it. That's how you count it. It's always going to be the second digit after the decimal place or the 4th digit. That's it. 2 or 3 numbers, use the second number. 4 or 5 numbers, use the 4th number. That's it. All right. So let's say we went from 139.135 to 139.235. Great. We went up 10 pips. And then if we went from 139.135 to 139.035, that means we went down 10 pips. All right. Because the 3 is the decimal place. All right. Is the pip. So we count. But when you get to 10, you got to go back. You'll carry the 1 like they taught you in school. That's it. That's how you count pips, guys. That's how you count pips. Make sure to go watch the videos in AP Academy so you can learn some of these basic rules as well. All right. As you can see here, our pip counter, as long as we have the AIRO pip counter on the chart, you can see we always and keep track of what our trades are on. So I'm on GJ, but I can see that I'm in profit by 1 pip right now overall up here at the top. And then I only have 1 trade on. So if I have 10 trades, it'll tell me overall, let's say I've got 5 trades in the positive, 5 trades in the negative. It will give me the math, it'll do the math for me and tell me overall I'm either up or down on all my trades. All right, based on pips. And then individual one here as well. All right, so I will stop sharing one more time. We'll go answer some more questions real quick. If you're not seeing the pip counter, there's going to be an update. I'm going to be updating it to move it into the top left-hand corner underneath the one-click button. That way it's easier. Everyone has different size screens, which is changing the issues, or messing up where the actual charts are at. Actual pip counters at. So if you don't see it, that's fine. It will be corrected. I'm going to pause for a quick break. I'm going to go grab my charger from my computer. You guys can take a quick bathroom break, grab a snack, whatever the case may be. We're going to be maybe another 20 minutes. I'll get you guys on this call. All right? Hold on tight. All right, I'm back. Let's see here. Let's get back into Q&A. Yes, we can use, yes. So yes, the AIRO software does work with gold and commodities. All right. So the software works with cryptocurrencies, stocks, Forex pairs, of course, precious metals, energies, and indices. All right. So anything that has a chart software will work with. Someone asks, is next week a good week to trade? No, I wouldn't recommend getting back into the market with your real money until the second full week of January. All right. I explained this earlier. You can use AIRO on the go when you have it set up on your RDP for your computer. So you take RDP, you put it onto your phone and have it all connected. That way you can actually trade from your phone or your tablet. The date and timeline at the bottom of the chart represents the time from your broker. We talked about that earlier. That's your broker's time. All right. So your broker may be in a different time zone, and therefore that is the broker's time and date. All right. No 15-minute time frame does not mean just stay in the trade for 15 minutes. All right, that just means that each candle takes 15 minutes to form. Someone asked about if price is less than 15 minutes, less than 20 pips away from the zone. If it is less than 20 pips away from the zone, I advise not to take any trades. If you want to do anything different, you can. I don't recommend taking the trade. You do not exit trades just because an arrow pops up. There are only 3 ways to exit trades. I talk about all 3 of these. When price hits take profit, when price hits your stop loss, or when another zone of the opposite color pops up. If you're in a sell and a green zone pops up while you're in the trade, exit. If you're in a buy and a red zone pops up while you're in the trade, exit. If you hit take profit, it's going to automatically close you out. If you hit stop loss, it's going to automatically close you out. That is it. Do not worry about opposite color, opposite this, those are the only 3 reasons why you close the trade out. We'll go over strategy 4. I do not recommend trading any strategies really the first day the market is open, just because there are typically trap days. All right. Well, you guys will understand a lot more of that better when I get to strategy number 6 to talk about the market makers. All right, and how they like to trap people on Sundays and Fridays. All right. So when it says their screen doesn't show the price line, I gave you guys my settings. If you took a screenshot of those settings and put those settings on your computer, you will get both lines, both the bid and ask. All right. Certain zones are taller than zones based off of price. It's all based off of price. So don't worry about too much of that. It just allows you to see it. You just know it's there. But price dictates why zones are as big or as small as they are. If you do not see AIRO V2 on the section where I showed you guys the indicator is at, under the indicators folder, please submit a ticket so that they can help you out. Everyone should be seeing AIRO V2. It was uploaded last week. M15 is the time frame I'm recommending. I'm not going to be talking about any time frames lower than that, other than 5 minutes. So the 4 time frames I recommend are the M5, the M15, the H1, and the H4. If you want to just get 10 pips, take profit, trade on the M5, so the 5-minute chart. 20 pips, take profit, you want to go to the 15-minute chart, M15. If you want to get 50 pips, take profit, you're looking, go to the H1 time frame, the hour one, the 1 hour. And then 100 pips, take profit, you want to look for the, trading on the H4 chart, the 4-hour chart. Watch videos number 1 and 2, and you will know exactly where, what your stop loss or where your stop loss should be at, as well as the take profits as well, which I just went over. Yes, you can put AIRO on as many charts as you want, and you will get the effective trade setups. There is no limitations to how many charts AIRO can be put on. You should limit yourself on how many trades you take. That is based off of your account size. If for me, if I like to take trades, it all depends on your level of risk. Remember, you're risking your money, so you want to make sure you risk management. I kind of gave that to you when I talked about using a 0.01 lot size for every $100. All right, but then also you want to definitely limit how many trades you're in, because if you're in 5, 10, 15 trades, that adds up. So 1 trade a day, 2 trades a day, I would say no more than 2 trades at a time is what I would recommend. But it really is up to your risk. So you have full control. It's the beautiful thing about the AIRO software. You have full control. But in the beginning, when you're learning, take 1 trade at a time. The red and white lines on the chart, you don't move those. Those red and white lines are price, the bid and ask. They are moved by the market makers. You don't touch them. All right. Let's go to the chat. I know I saw a couple questions there. So I just gave the take profit on the higher time frames. Please watch video number 2. That will explain where to put your stop loss at. There is no finite number. With the 15-minute time frame, I figured that out. I'm a natural scalper. But on the H1, H4, because there are higher time frames, you want to utilize a lower lot size because your stop loss is going to be bigger potentially. So watch video number 2 so that you can identify where to put your stop loss at. I'll show you guys how to change the horizontal line. Not really sure why you guys will be changing this, but we can go over it. So I put a horizontal line on the chart. I want to double click so I see the white dot on either side. When I see the white dot, I can do 2 things. I can move it up and down, and then I can right click on it and go to horizontal line properties. Here you can change the color. So under common, you can change the color to any color you want. Let's go from yellow to aqua. Hit OK. All right. That's it. If you have 2 moving averages on the video, on the chart, that means you still have the custom moving average. Because when you first start the chart up, it's going to have a moving average. Right click on the black of the screen, go to indicators list, and you'll see here, you should only have AIRO V2 on your chart. If you see anything else under there, which you'll probably see your moving average, select it, hit delete, then hit close. Make sure the only thing you have on the chart is AIRO V2. Then that gets rid of the moving average. I don't see any other questions. So it's 10:30. We're 30 minutes over our time. Last call for questions, and then we'll try to get off here. That way you guys can get to the charts. Make sure to watch the videos. Make sure to follow the rules. Again, I recommend just utilizing your demo account over the next few weeks until the second full week of January when the market gets back to normal. All right, we talked about this why the liquidity is going out of the market, which means that the market is going to move significantly different. All right. Strategy number 4. Sure, we can go over strategy number 4. Strategy number 4 video is up, but we'll go over real quickly here. As you can clearly see here, first we're going to close this trade out. All right. So last week, this chart we're on is the Great Britain pound Japanese yen. So all last week, price was in a uptrend. How do I know? Well, all last week when we were on the charts, there were more green zones than there were red zones. All right. So we knew it was an uptrend all last week. All right. So here's how it works. Because we're in the uptrend with strategy 4, we are looking for, we're looking at the price break of the money zone. All right. So the money zone, the high of the day is typically made, and the low of the day is typically made inside of the money zone. Sometimes you can see here, like on this certain day here, the high of the day was made outside the money zone. But most days, the high and the low are going to be made inside of the money zone. All right, you can see here on this day, high and low made inside the money zone. High and low made inside the money zone. Most days, what happened? Why are the high and lows significant? Well, because institutional investors and many people that trade different strategies have a strategy that plays off of the high and the low. All right. Those are also levels of liquidity. People are looking for breakouts. So the market makers know where the money is at. All right. Now, the beautiful thing about AIRO is that AIRO typically keeps you on the right side of the market maker's trend. Don't worry about what that means. Strategy number 6, when it comes out, it will open your eyes to why the market moves the way it does. All right. So the rule is if we are in an uptrend and we know that we have more greens than reds, then we're only looking for buys. That's number 1. Number 2, we already know we're only looking for buys inside of the money zone. All right. And then what you want to do is if we're on this day here, we want to mark up the money zone from the previous day. So boom, we put our line at the top of the money zone from the previous day. All right. And so the first candle, let me delete this one here. So on this day, right, we're trading this day. So we want to mark up the previous day. We put the horizontal line at the top of the money zone. All right. Just basically the top of that box right there, top of the box. The first candle inside of the money zone that we're in that closes above the blue line or whatever color you have it, you get the trade. And so as we zoom in here, you can see here, this is top of the money zone. This candle right here was the first to close above it, which means that we get in on this candle right here and we take the trade with 20 pips. You can see here in 15, 30, 45 minutes, it ran up 30 pips. So in less than 45 minutes, you had your 20 pips. You're done. That's it. 20 pips take profit, 40 pips stop loss. But what are we doing? We're trading with the trend. So we know it's an uptrend, more green than red. So we're looking for buys only. All right, we're looking for buys only. Number 2, we are taking the first candle inside the money zone. It might not be the very first candle. It might be the 3rd, the 4th, 5th, the 10th. Doesn't matter. We're taking the first candle inside the money zone that closes, which means it goes above the previous day's money zone and closes. And then a new candle opens. So when this one opens, that means this candle closed above the previous day money zone. So we get in on this candle. We route it up. All right, let's go look at the next day. All right, the next day. Put a line at the top of the money zone. Boom, boom, boom. You can see we had some wicks there. This is the fake out. Some people will see the break above the money zone and they'll get in that trade and get faked out. Like, oh, it's breaking, it's breaking. They get in the trade and then look, it drops 43 pips. Now you're freaked out and you're closing your trade or your stop loss got hit because, we do 20 pip take profit, 40 pip stop loss. That's why price must close above the money zone. There was no close. This is the wick. Means price used to be there, but it came back down. It closed down here. All right. And then you see right here, it closed above it outside of money zone. But then look what happened. If you got in this trade, you were up 6 pips and then it dropped on you. 39 pips, almost 40 pips. And now you're freaking out. You're closing the trade. All right. It's because you want to wait until what? The first candle inside of a money zone. See here, 2 days later, boom. This candle closed above the previous money day's candle. I mean, the previous day's candle, money zone from 2 days ago. And if we put another line here, boom, you see this same candle also closed the previous day. So this candle closed over the previous 2 days money zones, which means what? Enter the trade. Next candle. It goes backwards, 6 pips. It runs up 26 pips. We got our 20 pip take profit. We're done. That's it. That's why you must wait until you have a close inside of a money zone. Why inside a money zone? Because that's where the money is traded. It's more volatile. There's more liquidity in the market. All right. Let's go look at a sale. Let's go find another example. All right. 1, 2, 3 red, 1, 2 green. We're going to zoom all the way out. 1, 2, 3 red, 2 green. We know we're in a downtrend. We zoomed all the way out. Now there's no question. All right, we zoomed all the way out. And we can clearly see on Friday, we're looking for sales. All right, so we know we're waiting for what? We're waiting for the first candle inside Friday's money zone to close below the previous day's money zone. And you can clearly see here that it took us 1, 2, 3, 4, 5, 6, 7, boom, 8 candles, or sorry, 7 candles. This candle right here closed below the money zone. We get in 30 minutes, it's 20 pips. Even if you didn't get 20 pips right away, it reversed on you, 21 pips, and then it came down and dropped as many as 42. 20 pip take profit, 40 pip stop loss. 40 pip stop loss is right here. Didn't come anywhere near close to it. 20 pip take profit, you smashed that. But we take the first candle inside the money zone that broke below that line, which is this one here. We're out in 30 minutes. And if you got a late entry, you still made profit. That's the rule. Number one, identify the trend. So you only take trades in that direction. Number two, wait until the money zone starts. Number three, mark the previous day's money zone. All right, mark the previous day's money zone. So we're on Sunday here. I don't recommend really trading Sundays, but if you're going to trade, you're going to mark the previous day's money zone here. And most likely when we get into the zone here, take a trade. Now, I can tell you right now, the drop has already happened. I would stay away from it. This is the fake out right here. It's dropped 111 pips from the bottom of the money zone. I wouldn't look to get in that trade. There's a gap here as well. Typically, the gap is going to get closed. I expect that this price hits into the money zone, up and close the gap. All right, it's already starting to head that way. It's already starting to bounce that way. I wouldn't look to take that trade. So if you have kind of like strategy number three, if by the time you get an entry for the break of the money zone, if it's more than 50 pips, do not look to enter that trade. Why? Because the ADR of most of the pairs that I recommend are anywhere between 84 pips and 140 pips. So if price has already moved 50 pips, that's over half the ADR move for that pair on most occasions. ADR means average daily range. That means how many pips on average does a Forex pair move? They all vary. All right? They all vary. But the pairs that I recommend, their average daily range is between 80 and 140 pips. So if it's moving more than 50, don't take the trade. If there's a gap, don't take the trade. Leave gaps alone. Do not touch them. They are traps by the money makers, market makers. And if you don't know how to trade them, leave them alone. All right. That's strategy four in a nutshell. Is the break of the money zone. All right. And the money zone is nothing but liquidity for that day, the high and the low of price. All right. In a certain trend, you can see here in the downtrend, when price breaks that liquidity level, and I'll explain what I mean in strategy 6, but I'll give you a little hint here what I mean by liquidity level. You can see here, price was down here at one point. It found the amount of money it needed. The market makers, they did, and they ran price the opposite direction. All right. So the trend is down. So liquidity, the way market makers use is that when they get their money at one level and take it to another level, they make money that way, but they have to come back to that same level. And when they break below it with the trend, we know the trend is a sell trend. When they break that liquidity level with the trend, we can take the trade with. All right. Go back, follow, and watch strategy number 4 over again. Let's make it happen, guys. Take a look, see any more last questions. All right, somebody asked the question, how do you understand the overall trend when you have equal number of zones? When you have equal number of zones, you do this. Let's go find one real quick here. All right, imagine this bottom one doesn't exist. All right, so imagine that one doesn't exist. We have two green, two red. So they're equal. You do what? You want to count the distance of pips between the two middle zones. So imagine we have one zone, two zone, three zone, four zone. All right. You want to measure the two inside ones. And you can see here, the number in the middle says 723. All right. The number in the middle says 723. That's 72.3 pips. If it is more than 50 pips apart, you can take a bounce, arrow, go in both directions. All right. In both directions. That means that if I get a bounce, arrow, go inside the money zone for a buy, I can take it. And if I get a bounce, arrow, go off the resistance for a sell, I can take it as long as it's inside the money zone. You can take it in both directions. Live trading sessions are going to be on Thursday. Wednesdays. Start at the start of the money zone. However, this week we are not having a call because of the holidays. All right, not a good time to trade. So we will be taking a break until the second week of January when the market comes back open. All right, guys, don't see any new questions. Let me search here. All right. That's all I got for you guys. Maybe make sure to watch the videos, follow the strategies. If you need help, ask questions in the chat. As there are, I'll answer the questions you may have in the chat, as well as others that are there to help you out as well. In the meantime, guys, make sure that you guys practice proper risk management, and I will see you guys next Sunday. Happy holidays, Merry Christmas. If I don't talk to any of you until next Sunday, thank you.